Today, GC and I were just saying this is going to be a show that we're going to be referring back to often. So, good thing I wore this hat because we're talking about very misunderstood, misattributed, like understudied factor in home price appreciation, the effect of a premium grocer in a neighborhood, how that affects home price appreciation around it, rent price appreciation around it, how that ties into an overall story of a blossoming urban core and what that means to real estate investors. Welcome, everybody, to the weekly edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez, live from Nashville today. And with me, as always, the man that I affectionately like to call GC, because he's got the genius concepts. He knows how to generate cash flow. He's a great co-host. And because his name is Gregg Cohen. Say hello, Greg.
Hello, everybody. Fantastic to be with you today. And Pablo, you look dashing in your cowboy hat today.
Thanks, partner. And GC, well, I'm in Nashville. I'm at a property management conference out here, but you just got back from something pretty special, right? Where are you coming back from?
I did, Pablo. It was so cool. We just came back from a little press conference, a little event that we held within downtown Jacksonville for some city leaders to be there, some very special residents of JWB to be there, for our team to be there. And what we were doing was celebrating the 8 families, the 8 renters of JWB who are receiving $20,000 each in down payment assistance and are now becoming first-time home buyers. And it was an incredible celebration. We had multiple folks speaking, and I got to meet the families that you all are dramatically changing their lives by donating, by investing. You are changing lives here. And I wish you all could have been with me as I was shaking hands. I met Letitia and her son, Jace, and her mom, Wanda, who were there. And she was just so thankful. Of course, she said she never expected this to be real, even though she's been a resident of ours for many years. She's like, I just never could believe that I could actually win, that I could actually be selected here and receive this down payment assistance, and that I could become a homeowner. And so we just jammed out for 10 or 15 minutes talking about how that's changing her life. And so such a fulfilling event. So I'm riding high today. It's going to be a good show.
I love it, man. I love it. I won't forget the video that you shared with me. I don't know if it's already been shared, of like the recipients receiving their award and stuff like that. And like one of the residents talking about how it's been very strategic for me to live, in a JWB home, because this is all part of my big plan to like get to this point of being a homeowner. And as we are talking today about the effect of a premium grocer downtown and the effect of a urban core coming alive and these moments that are happening, we're talking about this big economic flywheel that as investors we get to benefit in Jacksonville. People that own properties get to benefit in Jacksonville, right? Like people that live in Jacksonville, median rents going up. But the number one thing that we can do to help more people benefit is to plug them into that economic flywheel that is being created by these investments and these things that JWB is a big part of, a whole bunch of other city partners and the public-private partnership and all this stuff is all a big part of. But plugging people into that flywheel looks like taking people from being renters to homeowners so that they can really, really benefit from this stuff alongside of us. And really cool to see you guys kind of like 8 people, right? 8 families.
Yeah, and it's not just 8. This is what we were talking about. You think about who is directly being impacted here. We are in the hundreds already because, as I mentioned, that there was Letitia, but there's her son Jace, and there's her mom, right? And all of her family members are now directly impacted there, not just the ones that are living in the home. And then think about the indirect impacts on the people that she speaks with, her friends, her colleagues, who are like, "Oh my gosh, you own a home now? How did you do it?" And then they became able, they believe they can do this. And this is, home ownership is the single greatest thing we can do to serve families, neighborhoods, communities, cities, our country. If we can do this, it's the foundation of all good things. So I want everybody to give yourself a big high five and a big pat on the back right? Because you're making this happen by investing with JWB, by donating to JWB Cares. We all are a part of this wonderful mission. And today is just a great celebration. So thank you
That's
all.
that's very cool, GC. And speaking of homeownership, I think I have we got some breaking news around home ownership that isn't just about this homestead program. GC, what's
Yeah,
breaking
man.
news?
Well, we started to think about not just the residents, the renters of JWB who are benefiting from becoming homeowners. We started just to look at our team. And, every TMM, every Tuesday morning meeting, we get to recognize, it seems like there's a new JWB teammate who is buying a home. And this is such a big win for our team, for our community, to have folks that are living out the mission here of home ownership and buying their own home. And so we started to kind of total it up. Last year alone, 11 JWB teammates bought a home, which is incredible. But what many people don't know is that when that happens, JWB is here to serve our teammates too. We, of course, do all the services that we do for our residents to become homeowners. We do that for our teammates as well. But we do something extra. And, JWB serves as the real estate agent for our teammates here. But one of the things we do as a special perk is we give those commissions back to our to our teammates. So there's over $122,000 in commissions that we did not earn that our teammates were able to keep in their pocket so that we could, of course, spread this home ownership message to the people that are closest here to JWB headquarters, our teammates. So we're super proud of our team taking that step. 11 new homeowners within our organization just in this past year, and over $122,000 gifted to our teammates to make that happen.
Got it. So if you pair the residents at JWB Homes and the team, we're talking about 19 new homes that we have created for 19 families that JWB is assisting and tying into the economic flywheel, man.
It's actually more than that because there's a lot of other residents that have bought homes that did not receive the $20,000 in down payment assistance, but
Oh,
do
true.
receive down payment assistance for JWB Homestep. So it's dozens more than that.
Love it, buddy. Really, really, really cool work, man. One of those things that's just like makes it ties the whole thing together, right? Like the mission and what I continue to say around what I lived in Miami and seeing these like developers come in and build up downtown is a very different experience for folks that were just trying to make millions of dollars in the next 5 years, 10 years and get out of there versus a group of developers that are so uniquely tied to the future of the city, are so integrated with the economic flywheel, not building something for people not from here, but building something for people from here to be able to thrive. I think it's one of the underestimated kind of like advantages that Jacksonville has, this very unique circumstance of you guys at the center of this flywheel along with other stakeholders, man. Very, very cool.
Happy to be a part of it.
Yeah, man. All right. So let's get into the subject du jour, AKA the subject of the day. We've been talking a lot, GC, about this big Publix announcement, right? And I just kind of want to set the frame of what is happening in downtown. I know that our community is very well versed in it. Oh, before that, speaking of our community, we have a survey that we would love for you to fill out. Joanna's going to drop a link in the chat. And if you could just take a minute and tell us what you like about the show, what you don't like about the show, what you want to see. Greg and I take very, very seriously the idea that we want to give you what you want. And there is no better way to know what that is than to ask you directly, right? So click on that link. It's in the chat right now. Open up that browser, fill that in. We want ideas coming from you of exactly what you are getting the most out of here and who kind of guests we can bring on here, right? Like this is your stage and we want to use it to benefit you. So that being said, GC, speaking of setting the stage here, downtown Jacksonville has been a place that has not been historically a place that a lot of people live in, right? It has, I think when I moved here for a long time, it only had about 3,000 residents. As we have been talking about this, right? We know that downtowns go from being 8-hour downtowns to being 16-hour downtowns, meaning people go there just to like work and then leave, to people go live, work, play. It's a destination. You go there for entertainment and you take your family there, you take your boo there for like a nice date, stuff like that. And when downtowns come online, they go from 8-hour to 16-hour downtowns. There is this effect on the MSA, the overall market that increases home price appreciation around it. You at JWB, you guys have known this for a long time. You've been pioneering this thing. And now this landing of a Publix supermarket is really, really significant because if you want people living in downtown, they need to have amenities. And number one is where am I gonna buy my eggs and milk, right? Tell us a little bit about kind of like the vision for the Pearl Street district, catch people up, how it fits into the like the fabric of the city, and what this Publix deal means to you guys and how you get made it happen.
Well, about 5 years ago, we started to look at how could we make the biggest impact. And we started to think beyond just, you know, our renters that we serve, beyond just the investor clients that we serve, beyond just building homes and selling those to those who occupy those homes. And we started to think about the unique seat that we sit in. And there's not another company in Jacksonville that sits in the same seat that we do. We have the opportunity to change lives through real estate in a way that there's no other company in Jacksonville can. And I don't know if there's another company in the country who is so dedicated to one market, who operates at this scale and sits in that kind of that nexus of property management, developer, selling to investors, selling to homeowners. And so we just saw all of this. And then we said, you know what have we learned from other successful downtowns? We had done the research. We had visited those cities as a part of our leadership councils here in Jacksonville. And we knew that a successful downtown is the tide that lifts all boats. And we saw what it could do for our community that we love so much here in Jacksonville. We saw how much it could serve the residents, meaning our renters, but also the residents of our community here in Jacksonville for quality of life and median income going up. And we saw how much it could serve our investor clients as well, because you all own properties surrounding downtown Jacksonville and the neighborhoods that we have been a part of for almost 20 years now. And we saw that those rents and those home prices go up dramatically because of that rising tide, that downtown revitalization. And we saw that median incomes go up for everybody here when this happens. And we saw it in Denver and in Nashville and in Austin and in Cincinnati and Tampa and all of these cities. And we said, you know what? Why not us? Why not now? And so we decided to be a pioneer and to be a big part of this revitalization effort well before anybody thought it was possible here. And so it was really driven by the win-win-win, right? Like, how can everybody win here? And if we knew that because of the size and the scale and how we operate, and that we're committed to one city, that if we could set everybody up to win, right? If we could set our residents, our JWB residents up to win, and our residents at large to win because of higher median incomes and more amenities and more fun stuff to do and better jobs, well, we'll win eventually, right? And we knew that we could set our investor clients up to win through higher median incomes for their residents and better jobs for their residents and more rent growth and more home price appreciation and still making it affordable in Jacksonville, that they would win and we would win later on. But we knew we needed to take significant action. So we started 5 years ago acquiring almost 20 city blocks in downtown Jacksonville. We did this under the radar. Nobody knew about it. I couldn't even tell you guys about it. I had to sit on that secret for many, many years. And we acquired almost 20 city blocks in downtown Jacksonville. It's now grown to about 25 city blocks. We found the money, raised over $230 million of investor funds that are focused on Jacksonville. It's not mercenary money. It's not money from big pension funds across the country and across the globe. This is Jacksonville money that is patient, that is here for the right reasons. And we found the right team. And we brought a team that has experienced revitalizing downtowns because they had done the same thing in Tampa. And they had done the same thing in Washington, D.C. And the leader of that organization is Brian Mull, who's been a guest on our show many times. Brian is the CEO of Gateway Jax. And so we put all this together. And the vision here is that we could create a situation where we could make a ton of impact and everybody could win. And if we set everybody else up to win, eventually JWB will win. And that's been our mission for the last 5 years. So that's setting the table. Now, you start to look for milestones of big wins. And that's really what this show is about. It's about this big milestone. We recently signed a lease with Publix, which is a premium grocer. If you're in the Southeast, you know about the Publix brand. It is one of the brands that you try the hardest to get into your neighborhood because it signifies growth. And we recently were able to announce that Publix is going to occupy about 31,000 square feet in our development in downtown Jacksonville, which is called Pearl Square. And it is not just a milestone for this project, it's a milestone for all of Jacksonville, because not only will we see that amenity here, all of these other folks that are in positions of making decisions for other amenities, bars, restaurants, you name it, they are now seeing that Publix signed. And guess what they're doing, Pablo? They're signing. So it is a huge win. And today's show is about talking about just how huge this is from the lens of the investor, which is all of you. But this is big, guys. This is big. This is making this more and more real, hopefully, for all of you. It's been real in our head for many, many years, more than 5 years. Slowly but surely, everybody else is starting to see it. Today, it's a big win.
Yeah, GC. And so to go a little bit deeper, right? We have been talking about downtown for a while. That's why we set the stage. We know that the number is 10,000 residents moving into the urban core. You have been able to show us data that shows that revitalized downtowns appreciate by, what is it, 85% more than the average. Like like a city will appreciate 85, 89% more than the average home price appreciation across the country in these revitalized downtowns. So we know that piece. The other thing that folks know is this idea that premium grocers are this like not very well kept secret of the real estate investor, whether it's exclude the downtown thing, right? Like, just like if somebody knows that a premium grocer is going in, they believe that rents rise. That's why people follow the Publix the real estate department and what they're doing to find edges. We have this report that I just shared inside the chat that is a study of, like such a study that found this idea that throughout the Washington metro area, proximity to a new grocery store correlates with significant apartment rent premium over submarket average rent. Most of the properties within the defined distance of the new grocery stores saw rent increases correlated with store openings. Apartments surrounding grocery stores closer to new developments and public transportation tend to have higher rents and premiums located in suburban areas, right? So like there is these studies that are happening. There's also another article that we found that studies these other premium grocers, Whole Foods and Trader Joe's, providing healthy boosts to nearby homes. GC, I know that you've been pouring into these. I'm sharing these in the chat for everybody that wants to say, but I know that you have some notes of what you found in some of these that you wanted to share. What stuck out to you in these articles that have been written?
Yeah, well, they all get to the same punchline, which is there is a premium grocer effect, and it is undeniable. And I don't think that's news to anybody. I like the Zillow one even more because it speaks a little bit more to us, right? We are not apartment owners. We are single family home owners around that Publix or around that Whole Foods or around that premium grocer. And I don't have the stat. Actually, I do have the stat right in front of me. What do you know? So it talked about how between 1997 and 2014, Zillow tracked, yeah, there we go. Zillow tracked homes near a Trader Joe's or a Whole Foods, and they saw that on average, they appreciated 148% more and 140% more, respectively. And the typical US home appreciated by 71% over that same time period. So it's a little bit more related to us. I think it's been a little bit more studied when it comes to apartment rents. But, our thesis is take the beautiful asset class of single family rental properties, invest around a Publix or a Trader Joe's or around a downtown that is revitalizing. And this is the strategy for you to get outsized gains without taking on the risk. You don't have to buy the building and invest in the building that Trader Joe's is going to go into or Publix is going to go into, because that's risky. You can buy this beautiful single family home and improve lives and families and communities by doing that and have risk mitigation. And then you can ride the wave that is coming from the Publix effect or the Trader Joe's effect. And so this also is a supplement to the research that we've done. We have looked at it from a macro scale of a revitalized downtown. And we understand that revitalized downtowns have, like you said, 89% more home price appreciation. So this is kind of like, listen, we know that there's a Publix, a Trader Joe's, a premium grocer effect. And then we know that revitalized downtowns work. what can we fill in the gap here? And the Zillow report helps. The other report that you had is really shining light on it as well. I tried to supplement it with what we saw as well and tell them a little bit more of the story of adding that premium grocer to some of these successful downtowns. When did they do it? What happened after they did it? And in terms of rents, prices, median incomes. So we can kind of fill in the gap because I want this to be more and more real for you all so you can take advantage of it. Because if you
Yeah.
know the outcome, if you know the punchline, and you know that investing in Nashville and buying cash flowing rental properties 20 years ago was the best way to grow your profit pie. Well, if it makes sense that that's what's going on in Jacksonville now, then you'll take action. And so I'm trying to connect the dots, and I think today's show is going to do that.
I love it. And let's just kind of talk about what downtown looks like right now, GC, right? Like right now downtown has a north bank and a south bank across this river. And when you're in that north bank of downtown, which is kind of like the really the urban center that has like the like real density waiting to happen, there really isn't a grocery store anywhere close, right? Like there's one kind of like on the other side, like kind of like by the stadium. It's a discount grocery store. There isn't something where you can easily go out and just like pick up your groceries, pick up a sub, stuff like that. Restaurants are starting to populate around there. I remember just like 2, 3 years ago, it was kind of tough to grab a quick bite to eat when we were looking around our our meetup location, right? Like we're looking around for a meetup location. We wanted to grab some lunch. It wasn't particularly easy to do it. Nowadays, when you go there, there's multiple options to grab lunch, grab dinner if you're going to do something quickly, but there still isn't that daily thing, right? Like so many of us go to a grocery store twice a week, right? 3 times a week. You forget something, you got to go pick it up. So the idea of there's a term called food deserts, right?
Mm-hmm.
It is this kind of like how would you define a food desert, Greg?
You got to hop on a bus or drive to go and get to your grocery store. You got to go a long ways to go
Yeah.
to get to your grocery store. You
Yeah.
know, I don't know if it's drive a 15-minute drive or whatever. It's hard to get groceries. That's what a food desert is. And
It's
that's what we've
true.
had in downtown Jacksonville.
Yeah, and in downtown Jacksonville, like you gotta literally cross the river before you can get to something like that. It's not very accessible to do that, right? So now as we're painting the picture of we believe that we're going to cross this 10,000 unit threshold. There's going to be places to live downtown. That's definitely happening, right? Because the shovels are in the ground, the dirt is moving. There's going to be, many more than 10,000 units to live in. What is going to bring people there? Greg and his team wanted to like look out at, hey, let's look at these other markets that we have followed, right? Like we often talk about Nashville. We often talk about Tampa, which is where we poached Brian Mull from, right? We often talk about Austin as well on the show. So why don't we combine kind of like this big picture thinking around downtowns and the moment that they got their grocery stores? So this is what we have found, right? Let's show this presentation here. And before we do that, we are talking about all these market kind of like dynamics. If you have not received the 2025 Q4 Jacksonville real estate market outlook that we put together, this is a perfect supplement for this show of understanding where these numbers are and these things of what's coming in the Jacksonville market. So you can download it at jwbrealestatecapital.com/report, right, GC?
That's
This
right.
this is an old slide here, or you
I
can
saw that.
or you can scan this thing. But if you go to jwbrealestatecapital.com/report, oh, Joanna put it in the chat. Or if you want to talk to Team JWB, go to chatwithjwb.com, or you can call them at 904-677-6777 or text them at 904-293-0341. And of course, these numbers that we're going through, we are not financial advisors. This show is for entertainment purposes. Do your own research with these investments. But this is going to be a really, really interesting story that you are going to see. Let's start with the reason I'm wearing this silly hat right now. Nashville. I'm in Nashville right now. I was just walking around downtown Nashville. Super dense. People live there, they work, they play there. It's vibrant 24/7, but it always wasn't that, GC. What did you find when you were looking at the downtown Nashville Publix debut?
Well, in Nashville and these other cities we're going to look at, there was not a full service grocery option in downtown. just like what we have been dealing with in Jacksonville before. So what you're experiencing today was the farthest thing from anybody's mind in Nashville, in early 2000s. And in Jacksonville, many people still feel that way too. But it started to change. Incentives started to come. They attracted early pioneer developers that started to take the risk of becoming that pioneer and starting this flywheel. And they worked up enough critical mass and enough people moved downtown that you eventually got a full service premium grocer like Publix to come to Nashville. And this happened in 2019. There are so many similarities to the project of the Publix project in Gateway's Pearl Square in Jacksonville. So many similarities here. So it opened in 2019. It has 27,000 square feet. It is a full service premium grocer. To compare that to Jacksonville, it is going to be 31,000 square feet for Jacksonville's premium grocer. And it is full service. That's important as well. Full service means everything you could want in a grocery store, not just a smaller kind of like mini version of a grocer.
Yeah. The deli, the pharmacy, all the stuff, right? Because just like this is saying, in Jacksonville right now, it is being serviced by these like smaller kind of like local markets, right? So the ability to get everything that you need without getting on a bus, without doing that stuff. And I think something that we'll continue to see is this idea that one premium grocer shows up, others follow, right? And this one, it was Publix, Whole Foods then followed. I was just at the downtown Nashville Whole Foods. It's awesome. And it really starts to serve the need from the residents. But I think what you'll find that's really, really interesting is these numbers that you uncovered, GC. You want to talk us through these?
Yeah, I started to think, okay, so what data can we look at and what can tell the premium grocer effect on the macro scale? And we have some really wonderful data to look at both the next year for pricing in the Nashville MSA as well as 5 years later. And then we can compare that to what the overall US did during that time. And guess what? It had a huge impact. So in Nashville, prices grew 57% over the next 5 years. And those home values rose 34% more than the national average over those 5 years. Guys, if you want to grow your profit pie, if you want to make more money, not take more risk, more money, you want your home price appreciation to grow 10, 20, 30% more than the national average. That's how your profit pie grows. And the premium grocery store effect is one big major thing that helped to be a catalyst for that growth in Nashville.
Definitely. And we're seeing this in the chat. So Sylvia Bettinger is saying Publix, Whole Foods, Trader Joe's, they don't invest anywhere that they don't know where growth will take place based on zoning and or a master plan. You need that people infrastructure. It's phenomenal news. Leslie Wilson, the Maven from the Mountains of Denver, saying, she imagines Publix having a very savvy real estate acquisition team like a Starbucks used to have a while back. And Starbucks would only open stores in appreciating markets, right? So this is all to say that we're going to look at this data, right? Like, do you think this is a leading indicator, Greg? Do you think this is a trailing indicator, the fact that Publix is doing it? Like, do you think this is is Publix driving prices up in these moments?
It's more of a leading indicator. I'm glad you asked that question though, because when I did the research and I found that Publix came in 2019, I was like, we've done the research to show that the real growth in Nashville actually happened more along the lines of like 2010 to 2015 is where they really crossed the 10,000 residents thing. So I thought it was a little bit later than what I was expecting in Nashville, in Jacksonville. And I think in most places, Publix is not stupid. Trader Joe's, Whole Foods are not stupid. They know the things to look for. They look for the same things that I'm sharing with you. Is the downtown resident population already growing before they're there? How many projects are currently underway right now? Because they understand that if they wait too late to get into that market, they're not going to get a sweetheart deal. Like they get a sweetheart deal when they are just before the tipping point. So they want to be there when all the smart people at Publix say, we've checked all the boxes here. We know what the downtown resident population is. We know what the infrastructure looks like. We know how many billions of dollars is being developed right now. We know how public and private partnerships are working together here. We've checked all the boxes. We want to be a little bit before everybody else sees it because they can come to a developer and then get a sweetheart deal. And that's what they got with us, which is great because we all win. So it's a little bit more of a leading indicator. But I am surprised it took till 2019 for Nashville.
It is surprising. And again, so this is home values around there rising, right? We as rental property investors, we make the majority of our wealth based on home price appreciation. But there's something else that we really like in rental property investing. It's cash flow. Talk to me about what you found here about rents, GC.
Exactly. So it's not just home prices go up, it's rents. Rents climbed 27% within 5 years in Nashville. And that is 9% more than the national average over those 5 years. So home prices, rents, that's two-thirds of the equation that we want to go up. But we can't forget about what is driving those home prices and rents and still makes it affordable. I'll segue us to the next point, which is median incomes. Median incomes are also going up. And this is why we love this strategy so much. There doesn't have to be somebody who loses, right? You can still have affordability as you see home prices go up and rents go up when median incomes go up. And that's what a premium grocer is a part of doing. So median incomes in Nashville also rose 22% over those 5 years. That's 21% more than the national average. And it's because of milestone projects like Publix.
As I think about my own lived experience in Miami, we were just talking about this earlier, right? Like, I'll bring up a couple different points throughout the show, but for this one, the idea of rents going up, right? Like, I remember when we were starting these like young professional groups in Miami and stuff like that, I was talking to this like new breed of like younger millennial that was moving into Brickell, and they're like, I'm gonna go in there, I'm paying this insane rent, but I don't have to have a car because I can walk to all the things I need. I'm close to where I work. And on the in the chance that I do need a car, I can just Uber, right? So the idea that rents go up around these amenities that become very, very walkable because it starts to displace other costs that they may have, to me makes perfect sense of why this thing correlates.
Exactly.
Yeah.
Exactly. That's why placemaking, urban design, that's why it's such an opportunity. It's so valuable. And when you do it right, it can have a dramatic impact on quality of life. And you can, of course, win as a investor. But you need people who know how to do it. You need a collaborative relationship with the public and private sectors,
Yep.
and you need scale. And that's why Pearl Square is the one of the largest urban redevelopment projects ever done in the US, 25 city blocks,
Hmm.
right? You just typically don't have that opportunity to do that in any major city. We have that here. And that's why we can place make. And under Brian's leadership, that's why you are seeing such smart design. And that's what Public sees. And they're like, okay, cool. I see how the rents today are this. I see how they're going to be this. And it's the rents of the commercial buildings around there. And we understand that we don't invest in commercial buildings around there. We invest in single family rental properties because it's the perfect investment for the everyday investor. And we invest right around there. And we understand now how single family home prices go up and rents go up following that same mentality.
And speaking of placemaking, right? Like when you think of placemaking, you think of these areas where people mix, right? Like it's somewhere that people go to. You have these like connections that happen randomly, right? There's like public areas that you can intersect with services that you intersect. The one side of the street talks to the other side of the street. And there's very few examples of just placemaking ground up like what Pearl Street is doing, particularly at that scale. But one such really, really good example of an urban area that just had a bunch of parking lots that were ready to be turned into something really, really cool, that also happens to have the Brian Mull effect, is downtown Tampa and the Water Street district. So I think, like we've talked about being there very recently. I've been in that Publix too. I was at a
Mhm.
conference, we needed something, ran over to Publix, came right back. Just very, very functional. GC, what did you tell me a little story about what you saw in the Publix effect of downtown Tampa?
Yeah, well, it actually started in 2019 in a neighboring Publix. I'm not sure if you went to the one in the Channel District and Channel Side, but it actually is a double effect of Publix here and has led to additional grocers like Whole Foods in addition to this. So it's not just Publix coming. Sometimes it's additional Publixes that are coming, and many times it's additional premium grocers. And this flywheel effect of people living, working, having fun, spending money downtown happens. And that's why rents go up, and that's why development happens. And that's why home prices go up for your single family rental properties if you already own them. If you wait till too late, then guess what? The prices have been too high. You can't make them cash flow. anymore. That's why there's a sense of urgency here to buy single family rental properties before this premium grocer effect. But yeah, in downtown Tampa, we started with the full service grocer, which was in the Channel Club, which is, again, the type of buildings. I want to include the pictures here because I want you to see the type of buildings. These aren't like your standalone Publixes in a suburb, right?
Mhm.
These are mixed use. There is retail on the bottom. Publix is on the bottom. Many times it's next to other restaurants. And there are hundreds of apartment units above those buildings. That is the type of mixed use building that really works for placemaking, for ease. It's everything that you just described there that people start to say, you know what, I could live downtown. I don't really need a car. You know, parking's kind of expensive. You know what, I can pretty much do 80% of what I need within the amenities that are downtown. So that's what happened, of course, in Tampa. You know, so we put the numbers here, and guess what? The premium grocer effect was dramatic in downtown Tampa as well. Prices grew 55% within 5 years. That was within 5 years of the first Publix opening. And that is 30% more than home values across the nation rose over those 5 years. So we're seeing a double time premium grocery store effect and then some with Whole Foods, which came, I think, about a half mile away.
As you mentioned that part, GC, that is another thing that I very much lived, right? Like the idea that when I was living in the urban core of Miami, as it was densifying, we moved there right as like this brand new Publix had just opened up. I remember Marta like being like fresh there from Venezuela, like going into the escalator and be like, oh my God, the smell of this place and the bread and all the stuff. It's so amazing. And shortly thereafter, a Whole Foods opened up right in the heart of downtown, right? Like, and then another Publix opened up, and it's this like once people start moving there, it becomes this snowball effect, and you need more and more of these services. But like you said, Publix tends to be kind of like really keyed in on before it happens, getting there early and being the one that plants the flag down, and then everybody else follows. Again, home price appreciation 50% over what was it? 30% more than the national average. Rents also around this Publix in Tampa rising 63% more than the national average. GC, talk to me about this.
Bingo. You're seeing this. It's, again, I love investing in things where I know the answers to the test, right? We know the answers to the test when it comes to how valuable a revitalized downtown is. And we all know through these published reports how much of a milestone a major grocer is to becoming that revitalized downtown city. We understand how close we are to that 10,000 resident threshold, right? We're seeing this become more real. So for you as an investor, you know, sometimes people say to themselves, oh, you know what, I like rental properties, but I want to do it next to the best school district, or I want to do it next to the best, shopping center that's coming. What I'm sharing with you now, investing next to the great American downtown, makes all of those other investing strategies pale in comparison. They cannot hold a candle to it, because what we're talking about here is citywide growth on a massive scale. That's that 89% growth. But we're pointing out things that are major milestones. These major grocers coming in are major milestones. And you're seeing this flywheel effect happen in real time in these other cities. And you see the effect. I would love it. We have a number of folks here. If anybody is from Tampa or is from Nashville and can kind of speak to what they have seen by living there and understanding how different the quality of life is downtown. And maybe some of you live downtown. And maybe we'll open it up a little bit more. I know Leslie's in downtown, is from Denver, and we have a number of the Mountain Mans in Colorado.
Yeah.
What are you guys seeing in some of these revitalized downtown cities? Because it matters. This can be a strategy that you can build your financial outcome on. And I love getting louder and louder and louder as it's happening. I had to be quiet for many years about it, but for the last year or two, it is such a sound strategy to be able to have this risk mitigated asset that you own around downtown. Don't take the additional risk of being a developer in downtown, but ride the wave, right? This is what we can do to create great financial outcomes. So if any of you have any stories, I would love to hear your real life experiences in some of these cities.
You mean you don't want other stories apart from mine in Miami? Is that's not good enough for you, GC? You're
I
tired of
love
my
your stories. I love your
Miami?
stories.
You
I
have
love
my
your stories. I'll never get tired of your stories.
Miami burnout for you. Some of the stuff, like as we look at these numbers, right? Like you're talking about this flywheel effect, right? Like it is also, you also see the median income going up in Tampa as well. Stephen White talks about this Tampa appreciation also lining up with the run up during COVID. I think what's important to look at these numbers, like we are looking at these periods of time where the overall real estate market in the US was doing well, but you are comparing this to the average real estate market. So this is not home price appreciation, and went up 30% and rent appreciation went 63%. It went up 30% more than the national average, 63% more than the national average for rent price appreciation. Median incomes rising 32% more than the national average in Tampa as well. Just like we're seeing these like comparative benchmarks in these other cities as well. So it kind of, obviously this is not a scientific study, but you are isolating for these factors of saying like, yeah, cool, it was a good time in real estate in general, but these cities did better because these downtimes came on board, because these grocers came into downtown, whether it's a leading indicator or causation or correlation, whatever. As we start to see the full picture, you get this cocktail of this is an overperforming real estate market over the next 5 to 10 years, right?
100%. Listen, as an investor, you're looking for risk mitigated ways to see things that others don't see, and you're going to put your money behind it. Like at the end of the day, if you're looking for an investment where it is like exactly like straight line, like causality, like go put your money in the bank. Like, then you get pretty much a guarantee, to do that. What we are searching for is how can I, in a risk mitigated fashion, see something that other people don't see and decide to put my money against it or to put my money with it. And that's what we see here. This is not saying that every time that Publix goes into a market, that's going to go up 60% over the next 5 years. But this is one of those major milestones that shows that it's a revitalized downtown. And what we know through the data and the research is that revitalized downtowns have higher home prices, higher rents, higher median incomes, higher quality of life, right? So part of what I am hoping to do here is to kind of fill in the gaps. You guys can poke holes in this a number of different ways, for sure. This is not a scientific study. But my job here is to help you see things that other people aren't seeing so that you can put your money confidently behind it. This is one of those things. Publix being and taking up 31,000 square feet in Jacksonville is very similar to what happened in Nashville. It's very similar to what happened in Tampa. We're going to take a look at Austin here as well. And if you believe that that is a major leading indicator and it's a good place to put your money behind that, then that's what we're hoping to accomplish here. I do want to point out that I'm really glad that they opened up the person who asked that question said, hey, you know what? Home values ran up a lot during those other times. The third example is Austin. And guess what? Austin's Whole Foods came in 2005. So that means that the next 5 years was not the run up. So we're going to take a look at that as well. So here's the Austin example.
Yeah, right on time, man. I also shout out to MVP Lee, who's wearing his cowboy hat that we gave him at the last summit. So we're starting a trend out here. Texas. Now we're going to Texas, right? Definitely need a cowboy hat for Austin. Yeah, this one is now much earlier, right? Like Austin kind of like had its moment and popped before like the COVID years and even before the Great Recession. So this Austin downtown Whole Foods facts is particularly interesting. GC, what did you find here?
Well, so I thought Austin's Whole Foods was really early
Yeah.
for Austin's growth. So you can see Nashville, Publix entering in 2019 was, I think, a little bit late.
Yeah.
Whole Foods saw what was going on in Austin even before you got anywhere close to 10,000 people living downtown. So it pays to be on the forefront if you are a major grocer because you get to lock in at really low rents compared to what they will be 5 years, 10 years, 20 years down the road. And that's what Austin did. They went in a big way, though. So this Austin Whole Foods in downtown opened in 2005. They had an 80,000 square foot flagship store and a 200,000 square foot headquarters. That's the picture that you're seeing there. It's both. There's also apartments that are surrounding it as well. There's also rooftop seating and a stage. So this served as an anchor, and it's nationally recognized as one of the most impactful urban grocery openings of the 2000s. And guess what? Trader Joe's took notice. In 2015, Trader Joe's opened in downtown Austin. I did the research on downtown Austin, how many grocery stores, how many grocery stores there were in downtown Austin prior to Whole Foods? Zero.
Yeah.
Zero. Now I think the number is 7 if I remember what the research said. Grocery store options in and around downtown Austin. So it's that multiplier effect of these amenities that come in.
I mean, this thing looks like the Otani of urban development projects, right? Like it has everything that we talk about in placemaking, right? It is mixed use. It has residential. It has a corporate headquarters coming into an urban core and a grocery store, right? Like all in one project. This is a really really cool project to like think about, and the impact that it has, unsurprisingly, here is significant, right? You see?
Yeah, so I love looking at the next 5 years, and I thought this was great to look at it because many of us know home prices did not do well the next 5 years across the country. But in Austin, home prices over the next 5 years actually went up 12%, while across the US, home prices declined by 26% over the next 5 years since that opening. Very, very significant.
Yeah, this is not, oh, everybody was doing well. This was people were doing really poorly, and Austin did really well because of this happening, which is
Yes.
really really telling. So that's home prices, right? We do know that rent stayed pretty resilient during the Great Recession as well, but like, how did the rents do here?
Yeah, rents actually went up 10% over the
Yeah.
next 5 years. I looked across the country, rents actually went up about 12%
Hmm.
across the country. So rents were very similar in Austin to overall across the country. You obviously
Hmm.
have different markets that don't grow as much, that
Hmm.
were probably a little bit more insulated for rents. So it basically kept in line with what the US average was doing over the next 5 years,
Nice.
which is a lot to be said for one of your major cities.
Yeah. Yeah. 100%. And then median incomes look like
Went
was
up a ton compared
yeah
to
yeah
the
yeah
US.
yeah
Yeah, so I mean, you got to remember the Great Recessions, median incomes went way down across
yeah.
the US. So median incomes in Austin actually rose 3% within those 5 years. So the math actually works out to it because they're relatively small numbers here. But median incomes rose 238% more than the national average over the next 5 years because of the premium grocer effect.
And again, I mean, in just this one project, we're seeing a microcosm of all the things that we've talked about, right? Like right now, we're going real hard at grocery stores, right? But really, what Greg and I have been poking at for the last couple of years, what JWB realized early on and has been acting on with a very long-term mentality of this like flywheel effect, is the mix of densification, mixed use, placemaking, services for the people inside of an urban core, attract and bring in young people there that are looking for jobs, that are looking for opportunities into a downtown. And that serves to also recruit employers. It recruits headquarters, right? Like when we talk about Jacksonville, sure, the latest thing is this Publix that is opening up downtown, but the idea that it's the number one corporate relocation city in America is not a coincidence. The fact that the Wall Street Journal talks about it being the number two hottest job market in America, not a coincidence. These are all things that are stacking on each other that lead to this stat that we continue to show. This idea that revitalized downtown cities in the United States appreciate 89% more than the average city since 2005. This is what we foresee Jacksonville doing. And while Greg continues to talk about this is how you can take take part of this like upside without having to be super super risky, it's you don't have to take this giant commercial lease and bet on future rent growth in order to like hedge for your bets and increase cash flow like Publix is doing. What you can do is buy these single family homes around the urban core and benefit from all these things that we see all these data points continue to tell us. How did I
Well
do there?
said, buddy. Mic drop. Thank you. Did a great job, man.
Yeah.
I think that, we're going to get louder about this because this is the biggest opportunity. And, it won't always be here in Jacksonville. And I think especially now when you're seeing interest rates come down and you're seeing these incentives that builders are offering right now. I mean, builders are offering up to about $15,000 in cash incentives because sales are slow. And so you can have incredible positive cash flow coming from these beautiful single family rental property assets. It's might be 10 or $20,000 less to get into them today than it was 6 months ago. You have a lower interest rate now. You get this $15,000 in your pocket as a cash incentive. And then it's coupled with these incredible milestones and this data and this research and this downtown effect or vitalized downtown effect. It's such a special time It really is. It's not going to be this way for long. It's like if you go back to 2021, we talked about how the deal was the debt, and we openly talked about how it's not going to be that way
Yeah.
for forever. Well, that was then. And if you didn't buy or refinance then, you missed the boat,
Yeah.
And then now the boat is this. This is the boat.
Yeah.
So, but after a while, we understand what happens. Nashville becomes Nashville, right? Austin
Yep.
becomes Austin. Tampa becomes Tampa, meaning like home prices go up.
Yeah.
And then I'll have to go and search for another boat for you guys. But this is the boat right now. Don't miss the
it,
boat.
it goes from being the place to invest right now to the place I wish I would have invested 10 years ago.
Yeah,
Right. Yeah.
exactly.
Yeah. Correct. And then it quickly stratifies into like, all right, now only the amount of people that can partake in it reduce, right? Because the cost goes up, the premium to like get in goes up as all this type of stuff happens. We're in this like moment where the cost is still relatively, like the money you need to bring to the table based on the certainty that you're going to get and the upside that you're going to get is still an unbelievable like combination here that is very take advantageable by so many folks.
Mhm.
Yeah, man, I love that you did this, right? Like I love that we took it from this idea of like, man, we're super pumped about Publix to like, what does this all mean? Because we've been able to like showcase this kind of like these inflection points on the residents and all these different things. To me, this is pretty clear data that at the very least there is a very, very high correlation with like this being these like inflection points, these jump off points that we continue to do it, that continue to prove this thesis correct, that, so many of us in this community are really, really like looking forward to, right? Like the investment in itself is great, but this idea that, we have this like insider tip of what is happening in real estate and that is totally fine in real estate is really, really exciting to just kind of continue to see play out.
I love it, man. I love it. I love that we're going to see this play out together as our community because we came online on this show about 5 years ago
Yeah.
and we have started to get really loud over the last, call it year or two. And it's every single year as you guys come to Summit, you see more and more of this taking shape, more and more of this becoming real. And I love how all of this has come together so that we can enjoy this together. I just started writing some notes down. I'm like, okay, we talked about the premium grocer effect, but we could do something like the UF coming to downtown. Like we could
Yeah.
look at the university effect,
Yeah.
the premium university effect. We could look at the premium stadium effect.
Mm.
We could look at transit-oriented development effect. We can
Mm.
start to look at some of these things. And I think we now have kind of a framework to like, again, point out these milestones, these things. It's not causality. Not one of these things means your home value is going to go up 60%, but we're putting the pieces of the puzzle together close enough so it starts to take shape. You see this beautiful, Rembrandt coming together
Yeah.
that other people just don't see, and that's in essence why we're all not your average investors.
I love the languaging that you're starting to do here, right? Like,
Yeah.
yes, the premium grocer effect. What is the world-class university effect, right? Like this to me is the shaping. If we can start coining this language, right? Like that I believe that a demarcation in language is a demarcation in thinking, right? So these kind of breadcrumbs that I think have all been picked up by you and your partners and you're starting to like show it and play it out in a very public forum unlike anywhere else before, right? Like maybe Nashville knew what it was doing, maybe Austin knew what it was doing, but we just didn't have like the forum of like telling this story time over time, year over year. And maybe we didn't also have the previous case studies to be informing this philosophy on, right? So like I
Mhm.
think we're sitting here in this community with this special opportunity to kind of like coin this method of real estate investing, this kind of like thesis that we have, and then really hold ourselves to the fire of like, is this really, really
Love it.
happening? Can other cities copy this? I think is awesome.
I love it, man. And we have the right asset because it's available for everybody. You don't
Yeah.
have to be an accredited investor. You don't have to have certain levels of money or income or whatnot, right?
Yeah.
Like, and that's part of why I love this so much and why it makes sense for us to share it so willingly too. For many other people and places and situations, it's a good old boys club or a good old girls club, and that's not what this is. I love it because we're here as a community.
Totally.
So
Yeah. Love it. All right. A couple of questions real quick. Stephen White. And we had a couple of questions of, do you expect this downtown effect to cross I-10 into Mixon Town? And do you think that it'll push down into Blanding in the next 5 years?
Yes. I think our entire MSA is going to be positively affected. It's the rising tide that lifts all boats. It's a revitalized downtown. That 89% is referencing citywide growth. So 89% more growth for revitalized downtown cities is referencing citywide growth. And so Mixontown and Blanding, down Blanding are cities within Jacksonville. And so my answer is yes. And that's why our strategy is to buy and hold single family rental properties within 10 miles roughly of downtown Jacksonville. And so, yes, I'm excited about it.
Pamela Myers and Veni Valsamagas want to know any ideas on dates for Summit?
Working on it. Working on it. On the doorstep. Gotta run it by a few very important people. Pablo, one of them. So hopefully we will have a date to announce here in the very short future.
And the patron Santoris of the community, always adding value here. Michael Santoris asking, I agree with the downtown growth effect, but what about the suburb effect, like Diamond Springs Lagoon, planning a 2,700 premium homes in the west side outside the city? What do you think about that effect, GC?
Well, I don't know that much about Diamond Springs Lagoon, to be quite honest. I can do a little bit more research for you, but I think that the same still applies, right? This is the rising tide that lifts all boats. I guess, Patron Santoris, let me know specifically what your question is about that. Maybe if you could, why don't you just send an email to us afterwards? Let us know specifically a little bit more, and I'll put some prepared thoughts together for you.
Sounds good, GC. Good job putting this report together, man. First of all, I want to thank the community. We had 70 plus people here for an hour, middle of the workday. Never take that for granted. Here, educating yourselves, asking great questions. I see a lot of comments here on Nashville Pablo Chesney. And how many more cowboys? Should we make cowboy hats a tradition? I don't know if we're going to do that. This was me just being a tourist in downtown Nashville and then realizing at a trade show it probably stands out really, really well. And then I popped this onto to surprise Greg, and he likes for me to be myself, so I appreciate it. But GC, you need me to bring you back a USA cowboy hat for you from Nashville? Is that what you want?
I mean, you can do whatever you want. I'm not gonna make it look as good as you, though. I mean, that's for sure.
I heard that the tradition of family vacations in downtowns is going to continue. GC, did I hear
Oh
that
yeah,
correctly?
yeah. I managed to make that happen too. I'm going to be going to check out Nashville here in the near future as well. Little 2 day stop for the anniversary trip for my wife and I. So the run continues. If you want to know where I'm going to be going sometime soon, just look at that list of revitalized downtown cities.
Uh,
I recently went to Seattle, Denver, Tampa.
yeah,
That's where I go.
I'm gonna have to bring a hat so you can just show up to Nashville already looking like a local. I'm clearly a local right now out here, so it'll work really,
There
really
you
well.
go. Thank you for helping me be a better version of myself.
Sounds good, GC. Dude, good job. Good job putting that work together. Good job for, Courtney and the team and like doing that research and really, really interesting data, really new nuance. I'm most excited about you seeing this like languaging thing of like how we can draw this thing. I'm thinking book. I'm thinking a bunch of like really, really cool stuff that we
Mhm.
can put out there
I
based
love
on
it.
these breadcrumbs that you're picking up. Hope to see everybody next week on the show. GC, any advice from now till then?
Don't be average.
Don't be
See you.
average.